Hello everyone, welcome to the Ichimoku charts.com daily analysis for gold for Monday, October 22nd, 2012. Well, a continuation of the trend to the downside today, and a candle that's made a lower high and a lower low. Previous day's trading, we had a very strongly bearish trading day, and a day where the sellers made a very substantial amount of net bearish progress and they closed with strong control. Today all of that has evaporated. We now have a white body candle, and that suggests that the buyers have made net bullish progress as opposed to the sellers making a very strong amount of net bearish progress. They've also closed up towards the high, and that suggests that the buyers have been strongly committed to this market throughout the trading day, and they've closed with very strong control of this market. And it does suggest that there is potential for a change of trend in this market. Now, the market has been interacting with this highlighted area, this yellow highlighted area, from some time ago. There was a previous large zone of support and resistance, and here we're now seeing support come into this market. Previously we've seen the area act as support in the recent past, and today there's likelihood that we can see a bounce and the buyers come back into this market and perhaps change the trend. So we do need to watch the high of that candle for a potential higher high and higher low. In terms of the big picture, we've seen this megaphone type pattern, and basically pretty much completion of that, with that market trading down through that fifth level. We have the 1, 2, 3, 4, fifth post here, and then the market trading down through this level here for this area. It's a very hard pattern to trade, but we can see here how it's a very volatile area, and as I've mentioned, they tend to be at major tops, and here we have a very strong uptrend, and basically this pattern did warn of a potential change in trend. But just thinking about the change of trend in this pattern, we do have very strong support down below here where the market's trading. We have this large zone, and then the cloud here, the Ichimoku cloud, the Kumo, extending all the way down to 1667, and we also have the round number support at 1700, which will be very, very strong. And if this trend does continue down, that will be an important area for this market. If the market trades down through there, even though we have the support from the cloud as well, there is potential for the market to test down to the 1667 level. But we do need to watch how the market behaves around that 1700 level if it does trade off. But for today's trading, there is a strong basis for a potential change of trend to the upside. We do need confirmation of that, but basically because the amount of momentum that the sellers had has really dried up quite quickly, and the buyers are now attempting to take control. In terms of the Fibonacci extension, we're examining the relationship of the current first time frame downtrend to the previous time the market was trending down, and here we're seeing rejection from the minor level at 78.6%. It does set the market up for that change of trend, and considering that we've had this change in the short-term dynamics with the buyers taking control, there is a strong possibility of a change of trend to the upside. Importantly, with the Fibonacci retracement, and this is an important one here, we've seen the market test down through the 100% level in a very bearish manner, and here today we've tested exactly to the 161.8% level at 1714, with the market being strongly rejected from there. So that does also suggest that there is potential for a change of trend to the upside. Now, if we do see that change of trend to the upside, we have very strong resistance close by, offered by the Tenkan Sen, which is trading at 1745, and then at the Kijun Sen, which is trading around the 1756 level, roughly, coinciding with that strong 1755 level of previous support, and then resistance, so very strong resistance overhead, but very, very strong support down below. Now, in terms of Ichimoku, this market remains bullish in the long-term time frame, and that's different than the equities market, which is neutral in the long-term time frame by trading within the cloud. But now this market remains bullish in that long-term time frame, but bearish in the short-term and medium-term time frames by trading below the Kijun Sen and Tenkan Sen. Previously, it had been some time since we saw the market trading below the Kijun Sen. For this medium-term trend, we saw a bearish breakout down below. It was a bearish signal, a weak signal, because it occurred above the cloud. We then saw the market attempt to rally towards the flat Kijun Sen. We saw capitulation with this spinning top type candle, especially around the 1755 level, and then we saw the trend continue to the downside in the longer term time frame. it does suggest that there has been quite a change in the dynamics in this market, with this market trading below the Kijun-sen. And this suggests that if this market does change trend in the first time frame, we will find resistance around this area extending up to 1755 or just above, and there is strong potential for the market to continue trending back down to the downside once again. So that is important. If we look back here, it's been a long time since the market has been trading below the Kijun-sen. Now, as I've mentioned already, this cloud, the Kumo, will act as very, very strong support for this market. And the important thing here also is, as this market continues trading further into the future, the amount of support, the extent of support offered, actually increases by the width of the cloud increasing. And there is a potential for the market to find support along the top of the cloud here, and for the market to quietly just creep up. So we do need to be aware of that. But we do have that strong resistance overhead that may limit this market, the upside extent of this market in the near future. So for tomorrow's trading, certainly the area above the high is very important for a potential change of trend. It's a likely change of trend, and we do have very, very strong resistance overhead.